Uh, Hi guys, this is Coach speaking, the author and founder of Forex Broker Killer, also known as FBK. So this is part 2 of our free lessons, which are exclusively available on YouTube, as well as my website, which is www.fbkonlineservices.com. Therefore, since this is part 2, please go and watch part 1 if you haven't watched it. It's right there on YouTube as FBK Free Lessons Part 1. So this is part 2, meaning that we are continuing from where we left. So you need to watch part 1 so that you can understand how it all started. So welcome everyone, welcome. We are going to be taking the next step because I believe that majority of you guys have already watched part 1, and I'm going to get into details as to what's gonna be happening in part 2. And remember that the information that I'll be providing you guys is just general knowledge, mostly based on my personal experience. So I thought I should share with you guys, and be aware that the foreign exchange industry is very dangerous. You stand to actually lose your entire capital. So make sure that you understand what you're getting yourself into. As a guy who has over 4 years trading the foreign exchange market, I know I make it look easy at times, but I can reassure you it's not easy. Even today at this point, 4 full years of trading foreign exchange market, I still get to lose money. But what keeps me going is that I know what I'm doing, because I want you guys to understand there's a very thin line, between gambling and trading. If you are doing this just to get rich quick, then you are gambling, and we all know what happens to gamblers. But if you are doing this because you are in love with it, you want to be financially free, therefore it's going to be different. Now you are an investor, you are an entrepreneur, you understand what you're doing. This is a career, you understand, for some of us. But if you just come from wherever you come from and then you're just here to test the market will dribble you, and then you will never come back again. That's what it does to gamblers. So make sure that you understand what you're getting yourself into. Make sure that you're quite aware of the risks involved. And the information I will be providing here you with here, as I've already stated, it's general information based on personal experience. It does not serve as any sort of financial advice directly. How you make use of this information, it's basically up to you. Now, part 1, I was discussing the general information based on what's really happening in the foreign exchange market. And part 2, I will be defining or explaining some of the concepts that you're going to be coming across when you are trying to trade this Forex thing. And I will be showing you guys how to actually trade the foreign exchange market, the apps you need, your demo accounts, and so forth. Now, I will be starting, I think it's best if I start with the Forex concepts. Why? Because you are going to come across them lots of times, So the first concept that I will be starting with here is market execution, right? Now, what is market execution? Market execution is a point. Remember, I will be explaining these things not necessarily based on Google's professional explanation, as it can be confusing at times. So I'll be explaining this based on my experience, right? Don't judge me for that. And then throughout this video, I will be showing you the practicals of where the concepts are working right on our trading app as we move forward in this video. So market execution is a point whereby you get to actually buy or sell at that time. If we look at the time now, it's 23:09. Now, market execution is a point whereby I decide to enter into a trade immediately. I can either buy or sell immediately. Remember, the foreign exchange market consists of a graph which can only go up or down. There is no any other direction. It could either go up or down. However, you must be aware that it could go up moving sideways, it could go down moving sideways, I mean, depending on whatever that you'll be trading at that moment. So market execution is simply executing or entering into a trade immediately. I will be showing you on the MT4 how it's all done. Number 2, pending order. Now, this is, I would say, it's a synonym for the market execution. Now, what happens in pending orders is that you want to enter into a trade, but you don't want to enter immediately. You want to enter at a certain price. Remember, in the foreign exchange market, we are trading prices basically, which I will be explaining going forward. So pending order, it's a situation whereby it's 11 o'clock right now, just an example, and you don't want to trade right now, but you want to trade at 12, and you believe that maybe at 12 you won't have access to the app. You can set what we call a pending order, and then when the market reaches that price that you set based on your assumptions or whatever the case it may be, therefore it will enter you into it will take you into a trade automatically. So market execution and pending orders, they have a relationship in a way. Market execution, you enter immediately. Pending order, you enter at a price in the future based on your assumptions or whatever strategy you might be using at that moment. So it's very important to understand the basics right before we get into the practicals. And the third thing that we are going to be talking about here, it's lot size. Right, you're going to be using you cannot trade without determining your lot size. Now, how do I put this? Let me think of a nice way to actually put this. Basically, a lot size, it involves a lot of numbers to start with. Basically, it's just numbers. The smaller the number, it's the less chances of making more money. The bigger the number, it's the bigger you actually stand a chance of making more money. However, it comes with risking, right? Meaning that if you choose a small lot size, it's all by choice. A lot size is your risk appetite. Going forward, as you understand how trading works, you'll be able to know which lot size to use, because as traders worldwide, we cannot use the same lot size. It's impossible. Number one, because our brokers will not be the same, our trading accounts will not be the same. So lot size depends on so many things before you could actually choose it, but you'll understand as we move forward. So basically, it's numbers. You just choose which one you want to use between the minimum it's 0.1, then the maximum it's 100.00. Right now, I've used 0.1. 0.1, when I say I've made profit, I will be talking about $1. $1, which is equivalent to 18,000 rands, right? Whereas when I use 100 lot size, I could make around about $10,000, and $10,000 converted by 18 rands, or the current exchange rate. Allow me to just quickly calculate it on the other device so that you can understand that the bigger the lot size, the more you stand a chance of making money. So if I choose to use lot size 100 with a certain type of movement, I could actually make around about close to 200,000. Where else, with the same movement, if a person had to choose 0.1 lot size, they could actually get to make about 20 rands or 40 rands, somewhere there. So my point with lot size is that the lower the lot size is the lower the chances of making more money. The bigger the lot size is the bigger the chances of making more money, and the bigger the chances of losing your entire capital. So lot size, it's where we apply risk management. It's where you decide whether you wanna go big or go home. It's where you decide whether you wanna start small or go all in. So it's actually a choice. You make that choice based on experience. You make that choice based on the knowledge you have, right? I hope you are able to understand the basic definition of lot size. Now, number 4, we'll be talking about leverage. What is leverage? Leverage actually has a relationship with lot size. Professionally defined in a way, we could say that leverage is a temporary loan. It's a temporary loan which is given to you as a trader by your Forex broker, right? But the loan is not in the form of money. The loan is an allowance. It's an allowance for you to make more money using less money. Now, this simply means that the lower the leverage is, the lower the chances of making money. The bigger the leverage is, the bigger the the bigger the chances of making money. So it has a relationship with lot size. If you choose a small lot size, you'll make small profit. If you choose a big lot size, you'll make big profit. And same goes to losing. You can also lose big. Keep in mind. So leverage, if you choose a small one, therefore you will make small profit. Why? Because if you choose a small leverage, therefore the broker will limit your lot size. Remember, you cannot just choose a bigger lot size as you wish. Your lot size is only allowed based on your leverage. So the broker has to give you a bigger leverage so that you can also use a bigger lot size if you decide to do so. So there's a relationship between the two, but they always have one thing in common. The lower the lot size or the leverage is, the lower the chances of making more money. The bigger the lot size or the leverage is, the bigger the chances of making more money as well as losing money. Always keep that in mind because it's part of trading. Now, number 5, currency pair. Now, so many people, they hear experienced traders talking about currency pairs. They are trading, but people don't really know what is it that we are trading exactly. So basically, we are trading what we call currency pairs, right? Remember, the foreign exchange market, it's a competitive market, right? It's a market whereby countries are in competition. They are in competition of what? Their economies basically are in competition. This simply means that it's only a currency pair when there are two pairs, meaning that all the time they always go in pairs. It's always two countries competing against one another for power, for more economic ruling, right? Now, an example of a currency pair. Let's take United States dollar. On the foreign exchange, it's abbreviated as USD. It's USD. Now, if it's USD just like this, there's no way you can trade it when it's alone. It needs a competition so that the market can be able to move up and down. You understand? This is what we call the exchange rate. Now, remember what I said on part 1. I said most people are actually trading Forex, but they are not aware, right? As much as they talk about things they don't know, they actually live Forex. We all live off Forex, trust me. Especially people who are traveling abroad, you cannot travel without Forex. So basically, we have traders who are aware that they are trading, and we have traders who are not aware that they are trading, but we all play a role in the industry. The only difference is that some of us make more money out of other people's decisions, right? Only because we are smart, you know. Remember, there's working hard, there's working smart. It's all up to you. For this, you just need your cell phone internet access. Then that's it. You don't need to go anywhere. You don't need to have an iPhone to trade. Just as a cell phone which supports WhatsApp, you are able to trade. So continuing, USD, that's United States of America. Let's compare it with another country. Another country could be South Africa. South Africa on the foreign exchange market is abbreviated as ZAR. So when it's like this, it's USD ZAR. Now this is what we call a currency pair. If it's USD only, it's not a currency pair. If it's ZAR only, it's not a currency pair. It's only a currency pair when two countries are competing, or when basically, in short, when two countries are competing, that's when we call it a currency pair. Otherwise, it can never be a currency pair. Now, another example could be Great Britain pounds versus USD. So it can actually be the other way. Sometimes USD will start first, it will finish, and vice versa. You understand? So these are examples of currency pairs. Another example could be CAD, which is Canadian dollar, versus JPY, which is Japanese yen, I think. So you can see this is currency pair. These are currency pairs, I mean. This is what we are trading, right? This is what we are trading. Remember, the foreign exchange market consists of a graph which can only go either up or down. There is no any other movement. So this is a currency pair. This is an example of a currency pair. Remember, currency pairs always have numbers. I will be explaining those numbers on the MT4 app so that you can understand. Currency pairs always have numbers. If there is no number, then there is no currency pair, because those numbers are the ones which determine the exchange rate. If you can watch the news, especially if you're in South Africa, when the news ends, they will be talking about these things at the end, that rand is 20 rands against the dollar, rand is 15 rands. This is the place where this is where this gets decided. This is the source of information which the broadcasters are actually getting whatever details they'll be providing you with. So as retail traders, we have a huge influence into what we actually want that currency pair to become. So we should be respected a lot more than we are right now, because so many people don't understand that we play a huge role into the country's economy. But that's a story for another day. So we also have a term called spread, right? You'll understand it further when I open the trading app, which I'm still coming there. A spread, basically, it's a charge. Remember, on part 1 I talked about forex brokers, that you cannot trade without a broker, right? Spread is a charge which you are being charged by a broker. Practically, they claim that's how they make money. But on the part 3, I will be dealing with brokers and exposing how they operate, so that new ones don't fall victims, because 95% of the traders worldwide, they lose money and only 5% win. You can ask yourself, what is the problem? Trust me, with confidence, I fall within the 5% which is winning. I will be explaining on part 3 based on brokers and how they operate. So spread is a charge which you are being charged by your broker. They claim that's how they make money, right? Now, basically, you will get to understand spread more, but it's always there. When I get to the MT4, it's always there. In short, spread is the difference between bid and ask, of which bid and ask, they are in relation to currency pairs. I will be showing you guys the practical on the trading app. Now, number 7, stop loss. Now, what is stop loss? Remember, let me make it practical. You have 300 rands in your trading account, or you have $20 in your trading account, right? Yet still, you don't want to lose it all. You want to lose a certain portion. So you are given a chance to set a stop loss. Stop loss, it's a point where you say, if the market goes against me this much, then you can automatically kick me out of that trade, and then I don't lose all my money. right? Meaning that this is sort of a protection for your account. It stops your entire account from being blown. Remember, being blown simply means that it's actually you losing your entire money. So stop loss is there to protect your account from being blown. So people like me who have over 4 years trading the foreign exchange market, over 4 years of experience, we no longer set stop losses. Stop loss is for beginners, people who are still soft, people who are still vulnerable when it comes to trading, people who are still trading with emotions. But if you are a hardcore trader like me, you don't need the stop loss, because if I lose, I lose. I'm used to it. You understand? I pick up my socks and then I try again. That's how it goes. So that's stop loss in short. And then number 8, take profit. Now remember, sometimes you wanna trade the foreign exchange market, but you don't have time to look at everything uh, all at once. So take profit, it's a point whereby you set on the trading app that when the market reaches this point, I want it to close off automatically. So stop loss, take profit, they have a relationship. Stop loss, it's what you set when you don't want to lose your entire money. You can actually decide how much you want to lose out of whatever amount of money you have. Take profit, it's a point whereby you're saying that, okay, if I reach this much profit, whether the market goes in my favor or not, I want to get out of that trade. So you're actually given all types of options when it comes to trading the foreign exchange market. It's actually up to you as an individual how you make use of the options which you're given. So these are the terms which we'll be dealing with mostly when we are trading. Now, I'm gonna be talking about the trading app, right? The name of the trading app is MetaTrader 4. We also have MetaTrader 5. Don't get confused. 5 is just an upgrade. I'm still using 4. You can use 5. It's almost the same thing. It's just an upgrade. That's just few changes then there, but the purpose is still the same. And some brokers offer only MT5, which is MetaTrader 5. Then some brokers offer both MT4 and 5, which is MetaTrader 4 and MetaTrader 5, right? So that's the name of the trading app. Now, the first step that you need to do is to install the app. If you're using iPhone, if you are using iPhone, go to your iStore or Play Store or whatever you guys may call it, that site, because I'm on Android. On Android, you just type MetaTrader 4. I'm gonna make an example with 4, not 5, because that's what I'm using. But you can use 5, you can explore on your own, it's still fine. So MetaTrader 4, I'm just gonna search for it. iPhone users, you can do so, it's there for iPhone as well. Now, in most cases, before I even finish typing, it will just appear. It will just appear because it's what I always search in most cases. So this is the MetaTrader app number 4. This is, you can see, over 10 million downloads worldwide. Over 10 million people have already downloaded this app. It's quite good. It's actually the best. It's not quite good, so I'm just gonna update mine because it's a bit outdated. So in your case, you need to install it. That's the first app that you need to install. It's still loading. My internet is a bit slow, but yeah, it's actually trying to pick up quickly. So it's about to finish. Now, this is the app that you're going to be using to trade, right? I want you guys to understand the pattern. Let me go back to drawing. How do I draw? Okay. I want you guys to understand this pattern, right? This is a relationship. This is a relationship. This is you. This is you, right? The first thing that you must have, it's a bank account, right? Bank account. That's the first thing that you must have. However, when you're new and you're trading a demo account, you don't need a bank account. I'm referring to when you decide to go to a real account. Remember, a demo account, it's like a dummy account. It's the money which you see there is not real. It's for illustration purposes. And sometimes the trading experience from a demo and a real account is not the same, only because of your emotions. So this is you. You must have a bank account, and then you must have a trading account, and then the last step will be the MetaTrader, MetaTrader 4 app. Now, the relationship between these three things is that you are going to be trading Forex on MetaTrader 4, right? The app. Then on your MetaTrader 4, you will be logged in your real trading account, which you would have opened at from your, I would say, at your broker or from your broker, whatever the case it may be, your real trading account, right? However, in this video, I will be making use of demo accounts because that's what I want you guys to use, because you are beginners. Just never be in a hurry to go for a real account. It's very dangerous, trust me. So trading account is the real account which you'll be given by your broker, the broker that you could have chosen at that moment. And then a bank account, it's the current bank account that you might have right now as we speak, right? There will be a relationship between the three. Basically, you put money into your real bank account, any bank you might be banking with, except for Capitec. Capitec does not support trading. People use FNB, others use Standard Bank, others use NetBank, others APSA, and so forth. But Capitec does not support trading Forex. If you're using them, just know that you might need to find another bank, right? Now, you put in money into your bank account. Let's say, because remember I said the minimum is about 150 rands, which is about $10 estimation. These figures could change anytime because the economy is not waiting for anyone. So if you have 150 rands, you can deposit it into your bank account. Then after that, you will take your trading account and then you log in into the MetaTrader 4 app, right? Therefore, on your trading account, because you have opened it on a certain broker, for you to fund that trading account, you must go to that broker's website and then choose deposit and follow the instructions which you're given there. You will put in your card number and everything. Then they will deduct 150 rands depending on the exchange rate. Then that 150 rands will be converted to $10, which will go to your MetaTrader 4 app. Now, which is the app I just installed. Now, when you are trading on the MetaTrader 4 app, let's say you lose your money. You lose that $10 after the conversion has been made. You lose that $10. Therefore, you need to fund it again if you want to continue trading, or you can just let it go and then give up just like everyone else, right? However, if you make profit, let's say you make $20 out of the $10. Therefore, that simply means that you have actually made 300 rands as an example, right? What you do, you go back to the broker's website where you opened your trading account, and then you click withdraw, and then you put in your details and everything there. Therefore, the money will leave your MetaTrader 4 app, and then now it will go straight to your bank account. So you understand that there's a relationship between these three things. We trade on the MetaTrader 4 using our trading account, which we opened on separate companies, which are called brokers, Forex brokers. And we are going to link the broker's account, the account that you could have opened under that broker, with your bank account, so that when you make money, it can go straight to your bank account and vice versa, and then you can get to spend it. It's not so complicated as it seems. Once you get used to it, it's going to be quite easy, like playing my piano, like you are already. Now, back to our MetaTrader 4 app. Back to our Play Store. Remember, we've installed MetaTrader 4 app. I'm going to open it now, right? Now, when you first open this app for the first time, I know it's very, very complicated and everything. When you open it for the first time, they will give you what we call an automated demo account. An automated demo account which you can make use of, right? So in this case, I wanna try to open a demo account. I wanna try to open a demo account. And never mind the errors. The errors are there because this app is old. Open a demo account, a MetaTrader. Then I'm just gonna put in false details. But in your case, just put in real ones. Ne? I'm just putting in false details because I can. Leverage 1 is to 100, it's fine. Amount of money. This thing is actually disturbing me, 100,000. And I'm going to create an account. But don't worry, when you first open the app, it won't be complicated much. So it won't be complicated much. This thing just keeps on giving me an error. This thing just keeps on giving me an error. Let me try to log in the demo account I've created. Okay, yeah, it's in. Now I've created a demo account which has about 100,000 USD, right? Now it's gonna take us to the terms. Remember, we've been talking about the terms. Now this is the trading app now, right? This is the trading app that you've been waiting for. Now you don't know what's what. You don't know what to do. You don't know, it's so confusing. You don't even know where to start. Don't worry, you'll be able to understand. I'm just trying to align the notepad so that everything can appear in one screen. Now I'm gonna start by what you see at the bottom. At the bottom you'll see what we call balance. Balance is the amount of money which you have into your trading account. I have 100,000. Credit is the amount of money which your broker can give you for free, but it's not withdrawable. It's just an allowance for you to trade. It's just an allowance for you to actually use bigger lot sizes so that you can make more money, even though you don't have more money. And then equity, it's a total of balance and credit. So if the credit is zero, therefore the equity will be the same as the balance. Equity, it's the same as the balance before a trade is opened. It's an allowance for, it's actually your worth. I would say your net worth, or whatever the case it may be. Yes, basically it's your net worth, because once a trade starts running, your equity starts changing based on whether you make profit or not. Then free margin, I don't have a clear explanation, but it's in relation with an allowance for you to open more trades on top of the running trades that you might be having at that moment. So these are just the basic things. And then if we check, there's also history. I've just clicked on history at the bottom. History will show you your history, your everything. Basically, these are the two main things which we'll be using. And scrolling down, this is the first part you see there. It's profiles. It's where it's going to show your profiles, your demo accounts, and so forth. If you click the plus symbol, it gives you an option to log into. Oh, by the way, once you get to open a trading account, your broker will give you details. Therefore, you will search those details on the logging in part and so forth. That's for a later stage, not now. So here I'm on my profile. Then the second part is called Market Watch. Now, Market Watch, I'll be explaining everything, but what it does is that it shows you the current prices. It's more like where you get to choose where you get to choose what is it that you'll be trading at that moment. And then next we'll be having the messages, your inboxes. This is not much important actually, but when you create an account, they'll actually send you the login details, so that in case you forget them, they will send them here when they have promotions. I don't actually make use of that. And then news, if there are any news, they will be displayed here. Then calendar, it's economic calendar. basically it's actually good for fundamentals. It involves lots of news. You can actually install it separately if you wish to. And messages, it's another form of private messages. You need, it's an extra service you need to sign up to, not important. This one is just some community for MetaTrader 4, not important. Then settings, you can play around with your settings to change your chart colors. I've already changed my colors. I've already set the bar up to green, bar down red, black, so forth. You can play around with the settings just to explore more. Then the last one is just the details about the MetaTrader 4 app and the version that you'll be using at that moment. So now back to Market Watch. Remember, I will be explaining the concepts one by one, but showing you on the MetaTrader 4, right? Remember, I haven't entered into a trader yet. So I will be starting with currency pair. I will be explaining currency pair in practical. If you can take a look, on top we have Euro USD. That's Europe basically, and United States of America. And then we have GBP USD, that's Great Britain pound and United States of America. And then USD JPY, America and Japan. USD CAD, it's America and Canada. CAD, is it Canada? Yes, it is Canada. Then USD CHF, I don't know what CHF stands for, but CHF, I think it's for Switzerland, if I'm not mistaken. You'll correct me if I'm wrong, it doesn't really matter. NZD, USD, it's New Zealand and America. So there are so many pairs when you scroll down, and you can also add so many pairs. If maybe another pair is missing, you can click on it. Then when you go back, you'll find it here added at the bottom. So it's not a train smash. Same goes to removing. You can select the pencil and then select dustbin and then choose which pairs you want to remove and then delete them. Then when you go back to the Market Watch, they will be reduced again. So just play around with the app. Now at the, I don't know if it's, yeah, on my right side, you see a chart. You see this candlesticks, they're just going up and down. You don't even know what they mean and so forth. So remember, now I'm explaining currency pairs. Let's start with Euro USD. You select Euro USD and then it's going to open the chart on the other side. But with your device, you might have to open the chart manually. But because this is a tablet, it actually opens immediately. So here we have Euro USD, right? This is a currency pair, Euro USD. Basically, it's Europe and United States of America, right? On the numbers, we have what we call low, given as 1.08402. No, sorry. Yeah, basically low 1.08402. And then we have high given as 1.08492. So basically what's happening in this is that we have what we call bid and ask. So basically low is what we call a bid, and then high is what we call ask. Now the difference between the two is what we call spread. Remember, I talked about spread. Now spread is the charge that you have to pay. Remember, as you can see, the spread is counting 15, 16. So if I open a trade right now, it will start on a negative balance because there's spread. If the spread is 0, therefore the trade will start on 0. But because there's always a number, it will never start on 0. So don't be surprised whenever you open a trade, dark or blue, it's going to start on a negative before it could go into profit. That's just the ways of trading. And the spread, how we determine it, I mean, we just take the ask and then we minus the bid. Therefore, you will get the answer. Remember, low is a bid and then high is ask. So the difference between the two is spread, right? So this is a comparison of two currencies battling for power. This is what determines the exchange rate. Now, here's what's interesting. If we go on Google right now and we ask Google, what is $1 compared to South African rands. Let's just do so. Let's just go to Google right now. We are on Google right now. We are asking Google, what is $1 converted to South African rands? Google is saying that $1 converted to rands is 18 rands, right? It's 18 rands 76 cents. Where did Google get this information? I will show you just now. So I'm just going to add USD ZAR, or maybe it's known as ZAR USD. I'm not sure, but I can't seem to find it. Let me rather look for it manually here, because the demo account is actually limited. Let me look for it manually here. Let me. It's not here. It's not here. I wanted to show you guys. It's not here because this is a demo account. But let me rather open a demo account from a direct broker. Let me say just Forex. Remember, the broker that I'm searching here is because I've used it. It's not one of the best brokers, but it's what I can think of. Let me try to search just Forex demo. Now here it won't allow me to open a demo account. I wanted to actually open a demo account. Just let me just use any broker. Yeah, let me open a demo account. Let me open another demo account with a random broker. I'm looking for a currency pair called USD ZAR, so that you can be able to understand. So I've just opened a demo account with a broker that I don't even know. So it's still loading. It's still loading. Yes, so we are in this broker just to trade demo. So basically I'm looking for a currency pair called USD ZAR. USD ZAR. Yes, there you go. I've added it. Now when I scroll, I'll find it. Let's remember what Google said. Google said that one United States dollar is 18 rand 76 cents. This is where Google finds all the information. This is where Google finds all the information. So as you can see, the low is on 18.75893, then the high 18.78520. So it's basically 18 rand 75 cents now. It could go to 18 rand 76 rand. So whenever Google gives you this information, it's determined by the graph. That's what you should always know. It's determined by the graph. So basically, this is a currency pair in short, right? Now, I've explained currency pair. I've explained spread. Let me just show you how spread works quickly. I want us to look at AUD/CAD on top. AUD/CAD, let me select it. AUD/CAD, they say the spread is 98. I'm going to open a trade right now. Right, I'm going to open a trade new order, and I'm going to use lot size 0.1. Right, this is a lot size here. That's where you put in the lot size. Remember what I said about lot sizes. The lower the lot size, the lower the chances of making money. The bigger the lot size, the bigger the chances of making money. But it all depends on your leverage. You'll only be allowed to use a bigger lot size only if your leverage is bigger too. If not, you won't you won't be allowed to. Now I'm gonna buy randomly. I'm going to buy. Buying simply means that I believe that AUD/CAD is gonna go up. Now immediately after buying, it started by saying minus 0.77 at the bottom right. If you have seen it, now it's counting on a loss. It's red. Once it turns blue, it means that it's profit. Now I can only make profit. If you can take a look at the graph, I can only make profit Once the blue line goes above the little green dots lines you see there, dotted line, I mean, you see there. If the market goes above that line, that's when I will sit on profit. But if it goes against me, remember I bought. Buying simply means that you believe that it's gonna go up. If it goes the opposite way, you will lose. And then you will always be on a negative because of what we call spread, right? It started on negative 77. It's still there right now, going up and down. I'm gonna open another trade. This time I'm gonna use lot size 10.00 buy. Now 10.00, it starts on minus 800. You see why? Because the spread is bigger. If I choose a pair which has a lower spread, then it won't start on negative 800. You can see the spread is on 106. Let me look for a pair which has lower spread and use the same lot size. Let me use Euro USD and then use lot size 10 and then buy. Let's see what does it say. Euro USD. Where is Euro USD? Euro USD started on negative 400, where else the other pair started on negative 800, negative 900. So when the spread is bigger, that's when it's actually dangerous. So when choosing a currency pair, always choose for a currency pair which goes around from a minimum of one spread to about 20, 30, 40, 50, 60. Anything above that, it's way too dangerous. So what I use mostly is currency pairs which their spread, they play around 20 something. Once you're on 20 something, you're good. But if you're on a currency pair which has a spread of over 100, that's crazy. Don't go there. So I hope you're able to understand the influence the spread has on your trades, as well as the lot size. Lot size 10, it's bigger. That means that the what you can make is gonna be bigger. What you can lose is gonna be bigger as well. You understand? So now let's say on the first trade, the one for 0.01 under AUD/CAD. Let's say now I want to set a stop loss. Remember what I said about stop loss. Stop loss is a point where you decide that you don't want to lose your entire money. So I'm going to select modify here. Now, when you're here, there are two things that you can edit. You can actually set this before entering into a trade. You can actually set this during a trade. Doesn't really matter. You can see the numbers which are governed by the red line. That simply means that it's a stop loss. The numbers which are governed by the green line, that simply means that this is a take profit. So I'm going to start with the red ones, which is stop loss, right? Because that's what we are talking about right now. So let's say that I don't want to lose all my money. I want to set a stop loss, right? On the AUD/CAD. So what I'm going to do is that you press either the plus symbol or the minus symbol, right? When it comes to setting a stop loss for a buy entry, I want you guys to understand, to listen attentively now. When you are setting a stop loss for a buy entry, for a trade that you bought, the stop loss has to be below the entry price, right? Now, in this case, the price that I was given here is 89187. Now, that simply means that the stop loss has to be below that. So, what I will be setting in this case, I will be setting about, let's say, 100 points. Now, 100 points simply means that I'm going to say 89,000, the numbers after the full stop, by the way, 89,187 minus 100, then it's going to give me 89,087, right? Wait, I think I've made an error here. Let me try it like this. Let me try it like this. Oh, okay, I forgot. Remember, when you set a stop loss, currency pairs are not the same, right? Some currency pairs have what we call minimum requirements. Some currency pairs allow you to set a stop loss of 100 points. Some currency pairs allow you to set a stop loss of 40 points. Some currency pairs, I'm talking about the minimum. So this one has a minimum of about 150. So it simply means that I must go down until the modifier turns black. If the modifier is gray like this, it means that they don't allow it. So as the market moves, it can choose to allow me, it can choose not to allow me. So don't be surprised when that happens. So let me just go down a bit. Now that simply means that I'm sitting on about 100 and something points stop loss. So I'm just going to modify it. It's saying that timeout. Timeout simply means that the time I was modifying my order, the market has already shifted. Therefore, I have to do it again. So let me go back to the pair again. And let me go back to that trade again, then modify it, and then try again. You can see that the market has moved to 200. The time I was setting it was on 187. Now it has moved. So let me start with 100 points and then modify. Now it has been modified, right? Now, if you can take a look at the graph, there's a red line. There's a red line at the bottom. The market is where the blue line is, and the difference between the blue line and the red line is spread, is what we call spread. So if the blue line touches the red line, then I'm gonna be kicked out of the trade automatically. As you can see, the trade, I'm sitting on negative $190. If the market touches the red line, it will kick me out automatically. So that's how you get to control how much money you want to lose when it comes to trading. Now, take profit. It's going to be the green line. Allow me to just edit to modify my order again. Now this time I'm gonna go for the green line. The green line, take profit, it's always above the entry point, and you cannot actually entry points. You cannot actually make your take profit 1 point after the entry, because every pair has a minimum. The minimum is about 40 points. So I'm just going to keep on going up until the modifier order allows me to place an order. For this pair, it should be 100 plus. I'm going to go up till the modifier allows me to. Now it has appeared. Let me count down a bit. Okay. It means it's somewhere around here. Then I'm going to modify it, right? After modifying it, if you can take a look on top, there's another red line which appeared. The second red line, it's written TP. It has number hashtag 6682664 TP, take profit. Once the market reaches there, it's going to give me the profit that I've set at that moment. This is a point whereby I say when the market reaches this point, I want to get out of that trade, right? But setting stop loss, take profit is not really important at this point. I'm just going to close my orders on losses because this was just example. As you can see, if I'm closing my trade on a loss, my balance gets reduced. So that's what's going to happen to you when you trade. And then this euro trade is sitting on profit. This euro trade is sitting on profit. As you can see, the candlestick surpassed the entry point. It means that my predictions were correct. Now I'm sitting on profit. So if I close on the profit, my balance will increase. And then the equity won't be the same as the balance once a trade is opened. The equity is the balance plus the profit or loss that you'll be sitting on at that moment you are running that trade. Now, I know that this seems very, very much complicated, but I want you guys to remember that practice is a solution for everything. Right? I'm going to do a recap. Don't worry if you're getting so confused about so many things that I've talked about, right? So that's just about it, the basics of the MetaTrader 4. I will be closing the trade as well. I close with profit 650. Therefore, my balance have increased at least. Now, if I go to my trading history, it will show me my history here, whether I've made profit before or not. Now, a recap. First step, you must open a demo account, right? No, sorry. First step, you must download MetaTrader 4, right? When you download MetaTrader 4, you are given an option that you want to use the automated one, which has limited features, or create a demo account. Creating a demo account, you're going to be given this option right here. You just say open a demo account, and then you just search Forex or whatever normal words you might think of. I don't know why my trading app just closed now. Yeah, open a demo account. Forex, you can just type in Forex. Then there are so many. You can choose any that you want, any demo account you want. Then after filling your information, then leverage, always choose the biggest you're offered so that it doesn't limit you when you're trying to experience. Then deposit, it can be any amount you feel comfortable with. Therefore, you confirm, and then you'll be having your demo account. And then when you have your demo account, your market watch will be filled with pairs. You just randomly open trades. This is all. I didn't explain market execution. I didn't explain pending order. I almost forgot about that because I've explained other things except for that. So market execution is when you decide to enter into a trade immediately like this. I decide to buy, then it starts counting. Or I decide to sell, then it starts counting. Therefore, pending order, it has types. There's about 4 possible ones. We have buy limit, sell limit, buy stop, sell stop, right? Pending orders, remember I said it's where you decide to buy or sell at a price in the future. So I'm going to select buy stop. I'm just going to select buy stop, then press the plus symbol. The plus symbol will give you the current price. Now I want to buy when the market reaches 89252, right? Now, because the pair has a minimum requirement, it won't allow me to. I'm just going to increase it to 299, and see now it's allowing me to, but it's changing because the market is moving up and down, and then I'm going to place. Immediately after placing, you'll see a line above on top. It's written buy stop. That simply means that if the market reaches that line, another trade will be opened. That's a pending order. Same goes to sell stop. Sell stop, it's setting a price below the current market price. Below that simply means that I have to go down randomly. So then I'm just going to place, and then another line has appeared at the bottom to show that now this is a sell pending order. Now when I delete the sell one, delete order, it will disappear. The line is supposed to disappear. I think I'm having a bit of internet connection problem. It's not allowing me to delete. But yeah, the sell stop has been deleted. I'm going to delete the buy stop. It has been deleted. So pending orders is practically doing that. Buy stop, sell stop, that's what we use at most. And then buy limits and sell limits, they're a bit complicated. I'm not perfect with them. I don't actually use them, but you can try to do your own research about them and how they work. So that's just about it. And let me close this trade. That's just about it. So the first step, you download the MetaTrader 4, open a demo account, and then just practice. Open trades randomly. Leave them for a day, leave them for hours. It doesn't matter. When you see profit, you close off. When you see a loss, you hold on, and then you try to set a stop loss. Just play around these things, and you'll be able to understand. Now, remember, this is just general information. You make use of this information for general purposes or general knowledge, whatever the case it may be. And you need to practice, guys. This thing might look easy, but it's not easy, trust me. It's very, very difficult. It might look easy because we make it look easy. You need to practice on your demo accounts. There's no duration into practicing. When it comes to practicing, I mean, you can practice as much as you want. Doesn't really matter. And remember, my correct, just clarity purposes, I do not offer investments. I do not offer account management. Uh, because there will be people who will be pretending to be me approaching you. One thing you must know always, I will never approach you. I will never inbox you. I will never text you asking you to join Forex or asking you to join FBK. I will never do that. It's only people who are using my name to do that. So please be aware. There is no person who can say invest 100 rent and then you'll get 5,000 and then you believe it. If you believe that, that means that you are stupid. It's impossible. This thing requires hard work. Don't believe a person who says, come give me 2,000 rent, I will give you 10,000 after 7 days. It's impossible. I personally can make that because I have the knowledge, but you cannot believe a person who says they will do that on your behalf. Rather, struggle and learn this thing on your own, people. Stop being lazy. So nonetheless, always remember, I don't offer investments. I don't offer account management. Be aware of the fake accounts which are pretending to be me going around approaching you guys. I will never approach you. I repeat. So my correct contact details up to this point, the website is www.fbkonlineservices.com, and then WhatsApp number it's 073 108 9886. Internationals, if you are outside South Africa, please start with the country code +27 108 9886. So that's where you can get hold of me in case there is anything you need. Remember, this information is general knowledge. You are not supposed to pay for it. If there's anything you can pay for, is Forex trading strategies, because at the end of the day, you definitely need a strategy, because you can't just go around buying and selling and not understanding what moves the market. There are factors which move the market. You need to understand what moves the market, right? So nonetheless, from your boy coach, thank you guys for your time, and I will see you guys on the part 3, whereby I will be talking about Forex brokers. But for now, you're good to go to practice for more than 3 months or whatever duration with this information I've given you. And on my website, you can go there and download the free PDF. This information is detailed in the PDF. You can read about it and understand further. Remember to watch the part 1 as well, and then wait for part 3. Just keep on checking my YouTube channel until you find it, and keep on checking the website till part 3 is available. Nonetheless, from your boy coach, it's been nice having you guys, and thank you guys, and all the best with your trading activities. Remember, when it comes to money, always watch who you listen to. When it comes to success, always watch who you listen to, right? For clarity purposes, I want you guys to check a letter by in the Bible, Ecclesiastes chapter 11 verse 1 to 6. It states that invest your money in foreign exchange. One of these days you'll make a profit, right? And then when you make profit, invest your profit in several places, because you just never know the kind of bad luck you might have in this world. You can also Google this letter. It means that Forex has been in the Bible. So don't just listen to people who don't have experience about what they're talking about. Don't listen to people who don't know what they're talking about, yet still they're trading a Forex. Every day when a person goes to America, goes to any other country, that's Forex. Yet still they will say it doesn't exist. Forex rules the world. It's the world's largest financial market, and there's nothing beyond that. Nonetheless, thank you guys for your time, and God bless you.